My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job, not just to entertain you, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. We still haven't gotten closure on this regional banking crisis. We don't know if the jobs market is going to take a major hit tomorrow. We're unclear on how much the Federal Reserve has accomplished in its war on inflation. Yet everybody seems sure that the Fed needs to keep jamming up rates in order to cool down a massively overheated economy. I'm calling it an unholy situation. Even though today it was all right, Dow inching up 3 points, S&P advancing 0.36%, NASDAQ strangely gaining 0.76%. Don't worry, we'll explain it. It's tomorrow that's important, because tomorrow may be the day when we get the first clearly soft employment number. And if that's how it goes, and we're going to start worrying about whether the Fed will keep pressing its anti-inflation bet at the same time as the economy is slowing, well, that's going to cause a lot of problems. So why don't we do this? Let's go to our game plan for next week, which starts actually with tomorrow's labor report. Remember, we're not here tomorrow because the market can't process that data until Monday. Wall Street's expecting about 230,000 jobs created. But what if there aren't any new net jobs away from services, from travel and entertainment? That would be a clarion call that there's a real slowdown coming. So you need to know that Monday will be all about picking apart tomorrow's non-farm payroll numbers. At the same time, we're in a moment where everyone's frightened, and they're all worried there'll be another bank failure, or maybe at least a shotgun wedding-style merger to prevent one of these troubled regionals from going under. You know what? At this point, I'm actually be surprised if none of them fail. I mean, I don't know. Troubled ones went out strong today, but we must wonder if commercial real estate issues and uninsured depositors and bountiful short-term treasury rates make exiting a bank to the sidelines compelling. Who wants to keep money in a place where you have to keep checking to see if it's doing well? Not me, not you. Which brings me to how this slowdown story will impact your portfolio. When the economy slows, the big money doesn't leave the table. It just shifts into a different sector. Right now, I see lots of money flowing back into tech because tech stocks tend to outperform in a normal slowdown without much inflation. It won't be all of tech, though. It'll be anything touching artificial intelligence or tech firms that help businesses replace expensive workers with cheaper software in a relentless drive for efficiency. Efficiency. That's the word Mark Zuckerberg fixated on when he decided to cull nearly a quarter of Meta's workforce not that long ago. Most tech companies, particularly the arrogant, once loved, now despised, fat and happy enterprise software plays, only know how to hire and then hire some more and then delve out huge gobs of stock to everyone and anyone. Zuckerberg recognized early on that the economy was slowed down. He ain't doing that. He was the first to aggressively trim the bloat. Now Meta's sales are going higher. Instagram up 300 basis points. Its costs are going down. So no wonder that stock seems unstoppable since he started firing people in November and dropped off the front pages in terms of other stuff where people are like angry at him. That's history. So I expect to see a lot of tech stocks going higher in a banking crisis. Low environment, that suits them. Just look at what happened the week that Silicon Valley Bank collapsed. Tech became must-own, and it's only growing stronger. And now we understand that the next-gen startups will be stillborn because they can't raise money in the stock market, which won't allow IPOs. That's even better for the incumbents. I see their stocks thriving, especially if they have an AI kicker. Tuesday morning, we get results from CarMax, one of the largest car dealers in the country. I bet there's still plenty of demand, but you can't expect them to do well with the cost of financing double what it was a year ago. The year-over-year comparison will be horrible. Fed wants to hear that used car prices are plummeting. They're not going to get the wish. We also hear from Albertsons, which is trying to merge with Kroger. I don't know about that. But I do know I want to hear about inflation. Has any foodstuff, it's any aisle, anything going down year over year? I got to know that. You got to know that. And I don't see it so far. Here's a treat. We have two Fed speakers who are both very, very outspoken, and in a good way. Neil Kashkari and Austin Goolsbee, because they're rational, logical, not fiery, not dogmatic, and they are well aware of what could happen if the Fed keeps tightening into a downturn. Could be a nice counterpoint to what we heard on Wednesday when we get the meetings of the last Fed meeting. They got to start thinking, they got to be a little more flexible. Wednesday morning, we get the March Consumer Price Index numbers. I think they'll run okay, not great. Last night, we heard from Conagra, classic pantry and freezer section play with a snack kicker, and CEO Sean Connolly went out of his way to explain there's still plenty of inflation. but he managed to stay ahead of the posse. The Fed's job won't be done until we start hearing the word deflation, and we are definitely not hearing that word right now. Another good reason to buy a year of efficiency tech stocks. We've also got a huge oil event Wednesday. One of the most coherent and best outlooks always comes from ConocoPhillips. They're having an analyst meeting. I like their vision. I like their worldview. I bet they start talking about stepping up exploration production with crude above 80. There's another meeting that could produce some real fireworks. It's the Warner Brothers Discovery meeting. They're hosting a streaming productivity press event. If this meeting had been held a few months ago, there would have been nothing but tears. Now it's all about efficiency there, too. And I think the term will be well received. The media is fascinated by CEO David Zaslav, who's a colorful character. I expect him to make a good impression. You might want to buy some of that stock ahead of time. Thursday morning, we get the producer price index. I think you'll hear the producer prices are starting to head down, all right? There may be even some pressure on some of the companies who buy these things to roll them back. So many have raised prices in anticipation of higher costs that maybe won't materialize, judging from this report. This number may cause the Fed to wonder if they're being maybe, let's say, too aggressive because they're winning in the war against inflation. We'll have to see. Earnings season kicks off Thursday with Delta Airlines. I worry the airlines haven't been able to capture all the profits they should be reaping. Look, we all know every time we go on a plane, it's full, right? But if there's anybody that can do it, I think it might be Delta. And then finally, here we go. After Delta, the deluge. Wells Fargo, Citigroup, JP Morgan all report at once. I predict Wells will have a very strong number. Nice upgrade today, this morning. Good loan loss reserves and a safe bond portfolio. JP Morgan will be, of course, there's always a winner. And I don't know, at 127, 128, 129, maybe it even makes you money. It's certainly the safest place to put your deposit. Should make up for the lack of investment banking business. As for Citigroup, I find this situation quizzical. Their tangible book is much greater than their stock price. We have to find out what that's about. I do hope they address it. It's nearly double the stock price. Something is wrong there. I want to know what's wrong. Now, we get results also from BlackRock. This could be a good number, but inflows might be just so-so. That said, I'd be a buyer of this one if it comes down because the asset managers know a compelling long-term winner. It's also got great software. Then there's United Health, which might be the most consistent beat-and-raise company in the Dow Jones Industrial Average. This is a stock I would buy ahead of the quarter if it comes down because of all these things that we hear early on. The government releases aggregate retail sales on Friday, too. I think that's going to support my I can't believe I came up with this. Long on money, short on time thesis, which means people will buy less stuff but spend more on services, largely travel and leisure. Bottom line, earnings season will be a tale of two tapes. A slowdown generated by bank issues in one tape and decent earnings, particularly from tech, in the other. That should prove to be the best sector this earnings season because, alas, tech's exactly what you buy at this point in a Fed-induced slowdown. But I'm begging, please, only buy the most efficiently managed tech companies because this is the year of efficiency, which I know isn't as much fun as the year of magical thinking. But it reads a heck of a lot better for your portfolio. Paul in Minnesota. Paul.
Hey, Jim. I'm a club member, and today I'm calling about a company that is one of my biggest holdings. This company has a fantastic balance sheet, a diverse business portfolio, continued growth in cloud computing, is expanding their gaming business while also adding AI capabilities to their software and services via their $10 billion investment in ChatGPT. Jim, should I continue to bet my family farm on Microsoft? Happy Easter, and
I think Microsoft, while not an inexpensive stock, and first, Paul, thank you for joining the club. We write endlessly about these. People should join. I know it sounds like a hard sale. I don't know. I'm spending so much time on it. Believe me, I'm going to not let you down. But here's the deal. I think that Microsoft is actually a consistent stock that people want to own. It was up for a great deal so far, and I think it's going to continue to go up. Why shouldn't that hit an all-new? I think it's going to hit a new high. Let's go to John in New York. John.
What's up, Jim?
How much have you, John? What's going on?
Second time talking to you in 2 months. I feel like we're becoming friends.
There you go. We're probably neighbors, too. Who knows? What's happening?
What do you think about Qualcomm?
I don't like Qualcomm. I feel like, as I've been saying, I own it for the charitable trust. I made a mistake. I got too enthusiastic. I called it boyish enthusiasm, and I regret that. We are hoping it goes above 130 so that we can sell the stock and own more of other stocks that we like a lot more. Let's go to Greg in my home state of New Jersey. Greg.
Hi, Jim. Booyah! This is Greg from Wildwood. This is Greg from Wildwood Crest, home of the most fantastic beaches on the East Coast.
Oh, my God. I met a guy who's making a development in Wildwood Crest on a plane. That place has come back. I mean, I am a Summers Point guy from way back, but you have it going there. What's happening?
My stock is J&J Snack Food. ticker JJSF, a local South Jersey company that makes a wide variety
I know them
of snack
well.
food.
I know JJ Snack well. My uncle did a lot of business with them, and I got to tell you, it's a winner. I've always liked it. Can't believe it's still independent. Why someone hasn't bought them? Because, oh, doctor, is that a good $3 billion company? Let's take one more. Let's go to Andrew in Alabama. Andrew. Andrew.
Yes.
You're up.
All righty. Hey, Jim, how are you doing?
I'm doing fine, thank you. How about you, Andrew?
I'm doing good. I got a quick question about IBM. What do you think as far as going into Q2? Do you think it's going to be...
It's a show-me situation. We need blowout numbers from IBM. I'm not talking about a manufacturer surprise. I am talking about a top-line number that is just wow. We need a wow from IBM. We've not gotten a wow yet. I want a wow. What do you think? Am I clear about what I want? Wow. This upcoming earnings season will be a tale of two tapes. A slowdown generated by bank issues in one tape and decent earnings in the other, especially from tech, including, of course, AI. Mad Money tonight. Last week I handed in my homework on Vontier, and you know what? We like this story. So we're going to sit down with the CEO to hear directly from the company on what could be on the horizon. And Constellation Brands popped on earnings, but I know their sellers are all over the place. Sellers, listen to me. You don't know what you're talking about. Stay tuned for the segment. And then Levi's plummeted on the quarterly report and CEO transition imminent. What do you do with this $15 stock? Well, I wouldn't miss my exclusive. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.